How do we evaluate an investment property quick and dirty?
That's what we're talking about today.
Welcome to the Utah Real Estate Show podcast, the show where two agents and a lender teach real estate best practices by talking through mistakes we've seen and made.
There is value in being able to see that, right?
Yeah.
You can really quickly sort something out and say, this is way overpriced, right? Because that's what's going to tell you, wow, this has a 1% cap rate. It's overpriced for what it is. It's way overpriced. And well, this has a 10% cap rate. Well, that sounds like a really good deal. They may not be disclosing everything that's happening. Okay, so it should be telling you things as you go. That's why we talk about the cap rate. Hello and welcome to another episode of the Utah Real Estate Show, University Edition. I'm Tyler Kazare, Utah Real Estate Agent.
Jason Christiansen, mortgage lender.
Eric West, Utah Real Estate Agent.
All right. As you heard in the intro, we're going to be talking about the capitalization rate,
which is not the percentage of letters that are big versus the letters that are small.
No, it's a quick and dirty way to understand an investment.
Capital. Money.
I want to stress that you do this before your due diligence on the property. We'll talk about this a little bit at the end. Okay, so the cap rate, you're going to hear this a lot. The capitalization rate, the cap rate, 5 cap, 7 cap, 10 cap. What's the difference? In general, you want a higher capitalization rate.
Because this is a return on investment. This is a way to look at the money you're making.
Exactly. It's a way to evaluate what is coming back on your dollars. Okay, so a higher cap rate, better. Okay, so let's talk about the two key inputs, okay? The first input is called the net operating income, or the NOI, okay? And the second one is your purchase price. Now these things, very often on an investment property, they'll be listed for you.
So just like return on investment, where you're looking at, I bought the property for this much, I sold it for this much. This is, I bought the property for this much. This is how much I'm making on the money I bought it for.
Right. This is how much cash it's going to produce. Okay. Now, that net operating income, we need to flesh that out a little bit more. Okay. This can be a pretty complex calculation. We're going to be very simple in this video. Okay. The net operating income is essentially revenues, how much money is coming in, minus expenses, how much money is going out. Okay.
So you're getting rent, but you're paying the mortgage.
Let's say that we have a revenue of $30,000 on a potential income property. Okay, it's going to be making $30,000 a year. By the way, this is always annualized. Don't do this on a monthly. It doesn't make sense monthly. Sure. Our revenues are $30,000. Our expenses in this example are $10,000. Okay, these are all your property management expenses, your taxes, your whatever it is, right? Those expenses that are going out the door.
30 minus 10.
Okay, so 30 minus 10, you math wizards out there, $20,000. Sorry, didn't want to rush you there.
I don't have that many fingers or toes. So
all right.
It would have took a long time.
Okay, so now we have $20,000. That's one of the numbers that we need for our capitalization rate. We need $20,000 for our net operating income. Okay, now the next number is the purchase price, right? Now, if you're just looking at this on a listing somewhere and it says, hey, this property is offered at $500,000. Okay, there you go. There's your purchase price.
$20,000 is your NOI.
Okay.
You get it for $500,000.
Yep, you get it for $500,000. Okay, now
so $20K over 500.
If you divide $20,000 by $500,000, you're going to end up with a 4% cap. Okay. Now, the first thing that people ask as soon as they have the cap rate, well, is this a good cap rate? Is this a bad cap rate?
And it is the cap rate.
It is the cap rate.
See, the other thing you need to look, and this is like so many other discussions and videos, is Utah cap rate tends to be low. If you go to the Midwest or the East, you can get higher cap rates. But is the property going to appreciate? Where do you plan on making your money? Is this going to be like a monthly income? Are you going to cash flow on this? Or are you buying and holding and realizing equity on the sale of the property? So different strategies.
In general, cap rate is biased toward cash flow properties. So
Absolutely.
You should know that if you're buying an appreciated property in Utah, the cap rate's not a great way to evaluate that. But like I said, we'll talk about that a little bit later.
Or just be planning on getting a lower cap rate. Now, here's the other thing. You've got the rents that have been charged or the rents that someone is planning on getting. You've got the expenses that someone is planning on spending or has spent. What has the maintenance of the property been? what are they doing? What are they throwing in those numbers? It's extremely subjective. So this is a great way to filter properties. Go through, look at it, and then in your due diligence, you run your own cap rate.
Right. And that's why we call it the quick and dirty, way to evaluate investments, because it does give you a very quick way to evaluate it. And there is value in being able to see that, right?
Yeah.
You can really quickly sort something out and say, this is way overpriced, right? Because that's what's going to tell you, well, this has a 1% cap rate. It's overpriced for what it is. It's way overpriced. And well, this has a 10% cap rate. Well, that sounds like a really good deal. They may not be disclosing everything that's happening. Okay, so it should be telling you things as you go. That's why we talk about the cap rate. We're going to talk about one more thing before we end off this video, and that is the inversion of a cap rate, right? So if you find that your cap rate is at 4% and you don't like that, what you're really looking for is a 5% cap rate, then if you work through all the math, what that's telling you is you're going to offer less for that property. You're going to offer a lower purchase price. So what purchase price do you offer in order to get a 5% cap rate? This is called cap inversion, or a capitalization inversion calculation, which is a whole lot of syllables. Basically, what you're going to do is you're going to divide the net operating income by the desired cap rate. So let's take our $20,000 net operating income and say we want a 5% cap rate. Divide 20,000 by 5%, you're going to come up with, I'm not going to offer $500,000 for this property. I'm only going to offer $400,000 for this property. That is a good use of the cap rate because it tells you where you should be. When you start looking at the different capitalization rates in an area, you'll find an area typically subscribes to a relevant cap rate. If cap rates in the area are 4%, but the cap rate that you're getting is 3%, offer a 4% cap rate, because that's more relevant to the market.
Okay, guys, what did we learn today?
Well, I learned that the capitalization rate is very good at quickly evaluating investments, but it has its limitations.
Always run your own cap rate. Once you get a property you like under contract, take a look at the numbers the way you would calculate it.
Remember that if you don't understand these things, talk to some professionals. Okay, remember, like, comment, subscribe, share. Eric is awesome before Tyler erases it, because we know that's what he's doing back there.
If you want to get in touch with us, shoot us a text at 801-228-7687. Make sure you mention the show. You can email us at theutahrealestateshow@gmail.com. You can watch this show on YouTube, and you can listen on Apple Podcasts, Spotify, or wherever you get your podcasts. If you learned something, or if you really love this show, give us a like on YouTube and drop a rating on Apple Podcasts or wherever you listen. The Utah Real Estate Show is a production of Hive Collective at Presidio Real Estate, with support from Security Home Mortgage. The NMLS number for Security Home Mortgage is 178787. The NMLS number for Jason Christiansen is 240472, Equal Housing Lender. Not only is this not legal or investment advice, but you should definitely talk to a pro before you make any real estate decision. Every situation is different and should be considered in context. Copyright Jason Christiansen, Eric Wist, and Tyler Kazare. All rights reserved. Talk to you next week.
Okay, how do you evaluate?
How do you invalidate?
I haven't changed my shirt for a little while. I don't know.
Unbelievable.
I'll word this one for now.
Put your marker away. No, you shouldn't be prognosticating that you're going to be Vanna. Yours is on. Okay.
You're invading my personal bubble. Scoot back.
Oh my goodness.
Don't cross my line of death.